Have you ever wondered why you can't get a hold of your tax accountant or CPA throughout the year? We have the perfect solution for you. You're listening to Business by the Books, the podcast that teaches you how to use your financials to manage your business. My name is Danielle Hayden. I'm the founder of Kickstart Accounting, Inc. and KSA Tax Partners, where we use bookkeeping as a vehicle to help business owners take control of their numbers. And I've helped thousands of entrepreneurs make informed financial decisions for over a decade. Today, we're going to be talking to Sarah Quinlan and Kelsey Chester from KSA Tax Partners about the importance of our strategic process and framework that we use for all of our KSA Tax Partners clients. We'll talk about the benefits of a mid-year check-in and why you have to get access to the reasonable compensation report immediately. Do not land you and your business in hot water in 2024. So every single tax return starts off with the tax prep call. And the purpose of the tax prep call is to make sure that we have all that information from our clients and to be able to make sure that we're capturing all of those deductions. Sarah, what has been your favorite part about the tax prep calls, and how do you think that's benefited both you and the client?
Doing the tax prep calls, I think it just puts a face to a tax return. It's a reminder that we're working with people and their businesses, their income streams, and what's important to them. And it gives us a chance to really dialogue around the different income streams that they have and kind of what happens. And we definitely use that time to trigger their memory for something that they may or may not have seen yet.
I like that you said gives you an opportunity to put a face with the name and the business's name, because that piece, we don't just do the tax return, right? Like that's not why we're in business. We didn't start this just to do a mass amount of tax returns because we love tax. What we love is making an impact in our clients and helping them run their business and grow their business. And it's about that person who gets to make an impact and who gets to continue to grow as a business owner. And so it's not high volume transactions where I think so many people are used to being treated like a transaction by their CPAs. Yeah. Kelsey, what do you think has been the most impactful?
I agree. I've loved it.
Well, I definitely agree with Sarah that putting a face to the tax return, we've really curated our team to be one that cares. Over the years, we've been asked what makes us different. And one of those main things, as cheesy as it sounds, is just that we actually care, which means that we take the initiative to make sure that we're taking the best care of you that we can. So we do ask a lot of questions during our tax prep calls. And the reason for that is we want to make sure that we do have everything. And it's one of those things where the client, you don't know what you don't know. So sometimes when we hear, I have everything uploaded, as we get through the questions, we realize that there's a lot that we don't have. And, we've uncovered that because we asked the questions.
Surprised by the need for this call. They either I don't want to take the time for the call, or why do I need to do this call in order to kick off my return? And it's something that we are really dying on our sword for, because it's really important, right? Most business owners are just thinking, I want to pay as little in taxes as possible. But how do you do that, right? You do that by taking the time to have that conversation with your tax accountant so that they can get to work on your behalf. So for anybody who's feeling that way, we want to talk to you, and there's a reason behind that.
And to that point, we have made a requirement now to have the tax prep calls. Last tax season, if somebody didn't have the time or didn't want to have the tax prep call, we did allow it. And for every single one of those, which there weren't many, but for every single one, things were missed because we didn't have the opportunity to ask the questions. So if you're not having a meeting with your tax preparer prior to having your taxes done, what are you missing?
I can't tell you how many CPAs I've worked with throughout the years who weren't asking. And I know our clients who have worked with so many people who they're not having those meetings, and it's leaving money on the table.
One of the things that comes to mind is spending more time up front creates less time later. And so by making sure that we have that time together to cover everything keeps us from having to do amendments if later on you realize something was forgotten.
We're here to make sure that we maximize your deductions, that we explore every opportunity for a tax credit that it could be available to you. So it's really to your benefit to make sure that we do have the tax prep calls and make that time for it. And like Sarah said, it's a little bit more time up front now to save you time later.
All right. So we talked about how we kick off the season, right? So that's during tax season, we kick it off with a tax prep call. We really try to get your return done in that time period, because that's the other issue is that all of your documents go into Never Never Land and your tax accountant gets to them whenever they have time. And we want you to know when that exactly is going to be. At the end of the return, we make sure that you have a review of your tax return, mostly done through video, but for some people who want to have that call where we're sitting down to go through it together, we can do that. What do you think has been the biggest impact in reviewing returns with clients? Like, what do you think that they have been able to get out of that?
Go
ahead. I mean, just yesterday we were, in a phone call with a client who has for years struggled with understanding where the numbers come from and how things work. She's like, it's been 5 years of me wondering these things with, previously. And then now she's got us and we're walking her through that and taking that time to explain it. And so I think, being able to walk that through, one, it just helps people really understand where their money's going and how it works. And then it is another time for us to trigger their memory if there is something that's missing, because it's a personal touch aspect to walking through it. And now it's real. Now this is the bottom line. And so if their attention wasn't captured on day one when we kick it off, well, it is now when we're talking about the tax being due. And so it's another chance before it gets filed for us to have a personal touch with our clients so that we can make sure that everything's been captured and they feel good about what we're sending.
Yeah, I agree. I think a lot of times our clients have never had the opportunity previously to have a tax return walked through with them face to face, to where they're able to ask questions. And it pains me to hear that clients say, I've always wondered this, like, why how is it that no one's had the opportunity? It's sad, really. It's a sad industry standard. But we really structure our services to answer to some of the qualms that clients may have, and this is definitely one of them. Is truly making sure they understand, and when you're going through it together and you're seeing it yourself, it does trigger. Well, what if I did have some additional medical expenses? Just seeing where everything is coming from and how it directly affects your all right.
So once the client understands their return, everything is filed, everybody gets back to business, we go on our merry way. Summer, I think, is that mid-year point where most of us are out having fun, enjoying summer with our families. However, I think it's in the back of most of our heads that it is a time also to think about how we're going to end the year. Like, what are we going to double down on? What initiatives are we going to use? How has this year ended up shaking out compared to how I thought as a business owner, especially? I think we see this a lot on the bookkeeping side, and that, we thought a client, when we set the budget was lower than what the client is actually doing. And there's a ton of room for celebration around that. But what are the tax implications of that? And then how, at KSA Tax Partners, how are we getting ahead of these surprises by using the mid-year check-in calls?
Having drastic changes in income and profitability from one year to the next can have a huge impact on not only your tax liability, but with this change, are you now in the best entity type for you? So this allows us to be able to, analyze that before it's too late. Are you now phased out of tax credits that maybe you were expecting because you've always gotten them, but will not be available to you this year? those are things that we can bring to your attention ahead of time, again, so we can actually properly tax plan for these types of situations.
Yeah. And I mean, I think it'll be a really good time to touch base with our clients again to make sure that they're on their estimated tax payments and their liability is on track to where when we do the return prep for 2024, there's no surprises. Education is important. And so having education and understanding around your numbers, I think to do a check-in mid-year is going to be so impactful. Again, not just around goal planning, but just making sure that the money's being set aside if you're going to owe, or if you're on track for a refund. You may not want to give the IRS an interest-free loan. You may want to keep a little bit of that in your pocket and adjust what your withholding is or what your plan is based on how things are going. So just like New Year's resolutions, it's good to
the
to
business
keep updated
side of
throughout
me
the
wants to keep talking about
Check back
budgeting
in.
and reforecasting and resetting goals for the back half. But there's like that part is fun. Like this is the real side of running a business, is making sure that you're not caught off guard by your estimated tax payments, by your tax bill, how much you're saving, how much you have in reserves. Are you doing the tax planning? Nobody wants to sit here in November and December and be caught off guard knowing that they never paid themselves enough through reasonable compensation and they've taken way too much money out in owner's draws, or that they have a huge tax bill and nobody ever told them. So really want to encourage everyone who's listening, if you are not working with KSA Tax Partners and you're working with another CPA firm, that you are requiring that they have this mid-year check-in call with you, that you have this touch point in order to be able to look at your numbers and be able to be prepared. And if you are a client of KSA Tax Partners, book the call, right? Like you hear these ladies talk, like they're not scary, right? Yeah, super friendly people. So they're not going to be mean to you on the call. They're not going to be judgmental. It's going to be a really nice open conversation where you can ask questions and get that support. And so I just really encourage everyone, when you get that email, don't file it away. Don't ignore it. Make sure that you actually book the call and you come prepared with any of the questions that have been in mind for you. Anything else that you guys can think of on this mid-year check-in call before we talk about reasonable compensation and payroll? We'll get back to the show in 1 second, but real quick, are you an entrepreneur or business owner struggling with the complexity of tax deductions and salary structures for yourself? It's common to feel lost in the maze of tax regulations and unsure about how to effectively pay yourself from your business. Navigating these challenges can be daunting, leaving you with more questions than answers. But what if there's a way to simplify this process, ensuring you maximize your deductions and set up the most beneficial compensation strategy for yourself? That's exactly what our guide on the top tax deductions for every business owner and how to pay yourself as a business owner are for. These resources are designed to demystify the essentials, helping you understand and leverage tax deductions, and outline a clear, effective strategy for your salary as a business owner. Through these guides, you'll learn the key deductions you shouldn't miss, strategies for tax-efficient salary and owner's draws, and much more, ensuring you're financially optimized and compliant. So if you're ready to take control of your financial health with confidence, head over to kickstartaccountinginc.com/gift or click the link in the show notes and download your free resources today. Okay, back to the show.
We can just summarize what you can expect on the call. So we'll first open the floor to, so you can ask any questions. Again, one of the benefits of this is that you have that opportunity to have that touch point with your tax team. So any questions that have been building up, of course, you have access, for KSA Tax Partners, you'll have access to your CPA year round. However, this is that dedicated opportunity where we come to you and say, let's have this meeting. That's something that I've heard a lot from clients is, I feel like I am the one having to chase down my tax repair. But that's not the case here with this mid-year tax check, and we're coming to you. So we'll open the floor for any questions that you may have. And then some of the things that we'll run through are, we'll get a temperature check on estimated tax payments. And I know this can be a stressor for a lot of clients. Should I be making them? If so, how much? Penalties, all of that. So we'll make sure that you have a full understanding of that and whether you should or shouldn't be paying the estimated tax payments. And from that requirement, you can then make an informed decision on whether you decide to pay them in or not. It's all about, making the informed decisions and having that information to be able to do so. Reasonable compensation analysis, which we'll get into next. So that's something that we can be on the lookout for. Are you in the best entity type for you and where your business is at today? That's something that we would want to catch throughout the year before we, go to file your taxes at the end of the year and realize that you are not in the most tax advantageous entity type for you. We want to make sure that we're catching that in time. Profitability. So is your business more profitable this year compared to last year? If so, what is that difference? And is there anything that we can do to strategize for the remainder of the year to help minimize your tax liability? So that's not everything, but just so you have an idea of, what we'll be touching on in the call, perfect. And you can formulate any questions that you may have from that.
All right, let's talk about reasonable compensation. To be clear, we're talking to our clients who are an S Corp. However, if you have not filed to become an S Corp yet, I still want you to listen because I know that there's a lot of buzz around becoming an S Corp. We have a lot of clients who come to us and say, I think it's time. However, if you cannot pay yourself a reasonable compensation, we don't want you to make that important election until you feel ready and prepared. So from your guys' perspective, what is reasonable compensation?
Reasonable compensation is the amount based on the market where you live and the type of business that you have and the work that you do. It's the amount the IRS expects to see that you're paying yourself in payroll. And so it's a benchmark. It's a place that you need to try to get to before you take distributions. It's not a requirement that you have to pay yourself that amount. You just need to pay yourself that amount before you're taking distributions, which, is a different way of paying yourself from your business.
That's right. And sometimes that reasonable compensation amount is not a black and white number. The IRS doesn't say, here's exactly how to calculate it.
Like, are they
all it says is, here are the factors. I know, right? They'll never make it easy. But they just say, here's a criteria that goes into it. Do with it what you wish. But we have a software that calculates reasonable compensation that comes with audit protection. So that is a black and white number for you. So KSA Tax Partners has the ability to provide that for you. And then we'll track how much you're actually paying yourself to that reasonable compensation calculation that we came up for you. So that you can pay yourself confidently and not have to worry about whether you're not paying yourself enough in salary or whether you're taking too much
when we made the decision to partner with this company, it was a game changer for us because we don't want to advise anyone to go to salary.com, make some estimates. You might pass audit, you might not. This is a really, really clear report that they can stand up against an audit to say, I am paying myself as a business owner, I am paying myself enough money. It qualifies to the IRS as a reasonable compensation. Now, it's like your tool to freedom. Once you've paid yourself that amount of money through payroll, you can take as much money in draws as you want. Like, we don't have to follow these vague equations that we've heard in the past, 2/3 through payroll, 1/3 through draws, and you're trying to make this mathematical calculation every month. You pay yourself through payroll, the amount of reasonable compensation, and then you take as much as your business can afford in owner's draws. And this is how we really maximize the tax benefits of being an S Corp.
That's right.
Yeah. I think one of the things that can confuse some of our educated S Corp clients is the why behind it. And it's because through payroll, it's through meeting this reasonable compensation, you are paying in your Social Security and your Medicare tax with that paycheck. And so once you've hit that reasonable compensation amount, once you've paid yourself what the IRS feels like is reasonable for what you're doing, then that requirement to pay into Social Security and Medicare tax is no longer. And so when Danielle's saying then you can take out these draws, you're not having to pay that additional tax on the draws you take, but you've got to hit that amount first before you do that.
That's right. And the complicated calculations of 2/3 salary, 1/3 owner's draws, all of those that you may have heard in the past, are not accepted by the IRS. They are not approved
they're not
ways
going to
or
go up
methods
against
to
an
calculate your
audit.
reasonable
Like you go apply.
compensation.
Yeah.
You will not pass an audit. Exactly. There is one set of criteria and the software computes it. So just have that in mind. If you hear, oh, I need to pay myself 2/3 of my income in salary, it's not an acceptable
I think
way
it's
to
important
calculate
to
it.
remember that the
good point.
IRS, they're protecting, they're holding us all to a standard because there are people who really take advantage of the system. The IRS wants to make sure that people aren't electing for an S Corp and then not paying themselves through payroll, right? That you are avoiding paying the payroll taxes. So we need to pay into the payroll taxes in order to be able to get the benefits of being an S Corp. So I think it's important to remember it's not like the IRS is coming after all of us, but because of the few, right? Like remember growing up, it's like the few kids who were bad. Now we're all getting in trouble. It's the same thing with the IRS. Yeah, exactly.
Now no one can go to recess.
Exactly.
And like Sarah said, you do not have to pay Social Security and Medicare tax on owner's draws. So, there is a tax benefit to that. But that's why the IRS has it as a requirement to pay yourself that reasonable compensation.
All right. So to be clear,
To avoid
every
that tax
single one of
evasion.
our KSA Tax Partners clients will receive their reasonable compensation reports over the next month or so. So they'll receive that with the payroll analysis. And this will be before the mid-year check-in calls. We want you to have that report first so that you can think through any questions that you have. Then we'll book the mid-year check-in call to make sure that we're looking at the entire picture, your profit, the compensation, estimated tax payments. So we're looking at everything on that call. So again, I just want to encourage you that you have to answer the emails, right? You have to open the email. You have to book the call. You have to think through things and come with your questions. I always consider our services done with you. Yes, we do the bookkeeping. Yes, we do the tax return, but it's really done with you, right? If you don't open the email, if you don't look at it, there's nothing that we can do to prepare you for the tax year and the end of the year. So I know it's a harsh reminder, but I don't want to bypass that help us help you.
It's a great point. I mean, we offer these mid-year tax check-ins, and we don't have 100% client participation. We'd love to hit that 100% this year. So
and if you're
please
working
do
with the
make
team
sure that
who
you take
doesn't
advantage of
offer
that.
this and doesn't offer a reasonable compensation, please contact us. We do offer the report as a standalone product. So we'll have the link in the show notes if you want access to that reasonable compensation report, even if you are not working with us for your full tax return. So we'll also link that. What else do we want anybody listening to know about tax season, thinking about their numbers and this back half of the year? Anything else that you guys can think of?
I would just say if you haven't had a touch point with your tax preparer for the year, make sure that you do, whether you work with KSA Tax Partners or not. It's so important. There are so many things to catch. And if you get pushback from your tax
I know
preparer,
in the industry,
are they the
it's
right
a
one for
norm
you?
to leave for the beach for the summer, but we're still here.
Yeah, I just would add, I mean, I do have clients already asking, because it is mid-year. And so they're like, we're ready for our check-in. And there is a reason for the cadence that we're having. And we want to get the reasonable comp out after the first half, after June 30th is done, so we can see where you are, have some time to digest that. And then we're really opening these calls up until August. That doesn't mean that we're not here for you in the meantime if something feels more urgent, but there is a reason for the timing. And so
that's great.
So keep watching your inbox.
Good reminder. I know it is the mid-year point, but take this time as a business owner to review your bookkeeping. Make sure that you've spoken with your bookkeeper. Make sure you've reflected on the numbers, and you can concentrate on that work as we're preparing that reasonable compensation and analysis ready for you in August. So really good reminder that there's still work for you to do as a business owner, and it is to review those numbers. That's why we send our our clients their numbers at the end of every single month. We don't offer quarterly reports anymore. We want them to look at them every single month. So you have homework to do. Ladies, thank you so much for being here. I have a favor to ask. If you have gotten any value from this show and you want the show to continue to grow and keep providing you with strategies for financial growth and efficiency, simply leave us a rating and review if you're listening on Apple or Spotify. Those reviews really go a long way in attracting more listeners, and honestly, they really make my day. So if you're feeling up to it, we'd love to see a rating and review from you. Either way, thanks so much for listening to the show.